Hi everyone and welcome back to the channel. Today's video is all about Digibyte. Our last major market update on Digibyte was around 7 months ago, still trading around these levels, so I want to provide a bit of a market update and a potential trade setup that we're going to be looking to enter for a nice 500% plus move. So looking at the price targets to the downside and to the upside for potential entries and take profits, and of course using the techniques as we always are, Fibonacci, Elliott wave, dropping it down to the lower time frame, having a look at the weekly and daily time frame to see if we can get any confluence for this potential trade setup on Digibyte. So guys, if you like the video, give it a like, of course. Any comments and subscriptions are appreciated as always. Let's get straight into it. So if we cast our minds back to January 2023, around 6 or 7 months ago now, where we first made that Digibyte video, our primary analysis focused around this big bullish candle fill here and outlining why we nearly always see price come down and fill these big bullish brick candles, and why we wasn't getting so excited about price moving up here, and about being patient and saying patience was going to be the key here for Digibyte and potentially be waiting for price to enter these zones down here. We dropped it down to the daily and weekly time frame to get some confluence of where we might be looking. So what I want to do is just play a couple of those clips from our last video and you can get an idea of what we were saying, and then we'll catch up to the current market structure. Another thing I'm looking at is this big bullish candle right here. I'm expecting at least one wick into this big bullish candle down here for Digibyte. Just like in the past where we do get the big bullish candles to the upside, we often will come down and fill them and close below and then even get back above. So we need to be on the watch out for that. So I'm going to outline that as a massive key level. Right now for Digibyte on the move down, we are now looking at a nice trend line break from that wick to the downside. So that can also give us a nice target. X marks the spot down here for a nice manipulation dip down in January, something like that. And then, so guys, just jumping back into the current time frame, I hope you can get an idea of them couple of clips that we just shown of what we were saying. So that was back in January, just as we was breaking out of this trend line, and you can see we had that monthly cluster of demand down here marked out, and we still haven't got down there, and we still haven't tested this trend line to the downside. So I'm not saying here that I think the bottom for Digibyte's in, but what we've said is that we expected these lows to be broken and we wanted to see this major fill of this big bullish candle, which on the weekly time frame looks a little bit like that. You can't really tell too much on the weekly time frame, but zoom out back to the monthly time frame. That is the monthly cluster of demand, the order block that we can see on that monthly time frame. So I think when you're looking at Digibyte right now and you're looking at risk to reward, we've just broken the low, we've come back, reclaimed the range. Do we have to go down and fill that big bullish candle? No, we don't. But is that a potential entry zone down here at around 4.5 to 5.5 cents? Yes, it is. It absolutely is. I think that would be a major opportunity. As we outlined last time, said it was going to be a major opportunity, a major cluster of demand, and you can see already these big wicks to the upside. Although they look a little bit bearish on the weekly time frame, leaving these big wicks to the upside, it is showing a bit of demand. What is pushing price up there and then coming straight back down? I think that just shows that the market makers are building them positions down at the lows, closing out the shorts, building them positions, probably going for one final spike. Max fear, max pain in the market for Digibyte, and then look to reclaim the range once again. But like I say, from what we wanted to see on the monthly time frame and the weekly time frame, we've had nearly absolutely everything. So, but when you are potentially looking at a trade here for Digibyte, especially a spot position, not too much leverage, you have to weigh up the options here of whether you are able to handle a 20-30% drawdown down to these levels and potentially miss the move if you're not going to enter a little bit at these levels, because the risk to reward at the minute in Digibyte I think is very, very good. You're potentially looking at about a 33-40% decline, which, you know, it could be too much for some people. That could be way too much for people to handle down. You might be looking to enter at the most optimal level, or you might be looking to enter at some levels down here, some levels down here, having them percentages set at different levels amongst this key zone, or even entering a little bit now. So it's all down to personal preference, but I think when we look at the risk to reward now for the moves down and the moves back to the upside, I think the risk to reward is very much in the buyer's favour. I've talked about that a lot in my most recent videos, especially when it's been the most seller's favour. Now I do think Digibyte is coming into the buyer's favour, especially if you are holding spot positions. When we have a look at this on the daily time frame, could it be that this is just another case of a bit of a Wyckoff accumulation down at the lows for a cryptocurrency? We've seen it so many times where we go and hit the low once, twice, break the low again, going for a spring phase. I think it happened with Bitcoin Cash most recently. Is Digibyte just lagging behind here and we're going to get that major 100% move coming in the future pretty soon? I think that could be the case, but at the minute we just need to stay calm, stay relaxed, and I think just layering in the bids at your own personal levels down here at the lows is never too much of a disadvantage, especially when you have a little zoom out here and have a look at the full chart. Is this just another case of we're just slowly gradually going down, bit of a rise back up in the market here, going in for that final dip, going for that final dip down into that monthly cluster of demand, and then get a major move like this where we can potentially be looking at some taking profit zones? So when we talk about taking profits, the first thing we want to be doing is just taking the most recent high, taking the Fibonacci down to the current lows, and look at that arrow, it's lined up perfectly at the 702 retrace, up and around 3.5 cents. So if you have a look at the percentages from current levels on Digibyte, have a look at that. We're talking around a 300-400% move, but if you get that move all the way down to that monthly cluster of demand, we're talking 500-600%. So layering in the bids down at the lows does make a difference, because it is a big major doubling in profits if you are able to enter at the lows. But it's just a bit of luck. Normally if you are able to enter at the lows and sell the highs, it's never going to be always easy, and you're probably never going to be able to do it. Maybe 1 out of 1,000 times you'll do it just right. But if you just take into consideration the risk to reward, entering at the lows and layering in your bids and setting your take profit zones up at Fibonacci's, I think you can't go wrong. I think we're potentially looking at about a 100% move here straight away back to the 2.36 retrace, and then looking for that 618702. So set your take profits up and around 100% profit, 200, 300%, set the layers and just do it that way. I think that's the best way to do it, because then you're layering out of the market and leaving a bit to ride to new all-time highs. You know, we could get it, absolutely, we could definitely get new all-time highs, but when we're looking at the low time frame here and potentially looking at risk management, we just need to stay level-headed, take profits as we go up, buy back as we go down, as you've seen we've been doing with H-bar, because these charts can pump so fast and dump just even faster. So take that into consideration. And this is just that example that I was talking about with Bitcoin Cash. You go from months of boring chop consolidation, 1, 2, 3 hits to the low, bit of a spring phase here in a Wyckoff accumulation zone, and there you go, one nearly 200% move in just a couple of days. You're talking absolute madness here in the cryptocurrency market. Everyone ignoring these coins, thinking it's dead down here, and then massive move to the upside. And it's not as if we was not ignoring Bitcoin Cash here. We did post a trade ages ago on TradingView, nearly 1 whole year ago, outlining this potential move. I'll just show you that. As you can see, guys, this was posted back in August 2022, so a long time ago, and I think I was maybe expecting this trade to play out a little bit quicker than what what actually happened. Let's have a little look at what happened here. I think we even have to press the button twice because it's been that long. You can see we've just started ramping up here. We didn't have to go straight from that level. We even dropped another, what, a 10-20% down below them levels, but it just shows it takes a lot of patience in these accumulation zones. And if you was accumulating for that full range, you're able to benefit from this move to the upside. Not quite met them major targets to the upside for that 400% move, but you've got at least a nearly 150% move there. So in a great position to be able to scale out now as the market is moving up. And you will have people re-entering the market back up here thinking, I'm going to miss out. These are the people that are late to the market and late to the party. Really is all about perspective here for Digibyte and the altcoin market and the Bitcoin market and the cryptocurrency market as a whole, taking a nice zoomed out perspective here, a nice 3-month chart. You can see the major zone that we're going to be looking for when we take a look to the upside is that big bearish candle breaker down. Just as we look for them big bullish candle breakers to the downside, we're going to be looking for them big bearish candle breakers to the upside for potential take profit zones. They align with the Fibonacci sequences that we're looking for and the extensions at the 702 and the 786. So I think the name of the game is patience here. As always, we've outlined a potential buy zone and a potential exit strategy as you are moving along for 100, 200, 300% moves. So just sit back, relax, let the market do the work. Of course, it's not financial advice, but of course, if you like the video, give it a like. Any comments, subscriptions, always appreciated. See you later, guys, and I'll see you next time.